Hi, everyone. Good afternoon. So I'm Manuel Silva from Santander InnoVentures. Very quickly on us, because I want these guys to talk more than me. So Santander InnoVentures is a corporate VC for Santander. We essentially invest in fintech companies with the dual objective of making them successful financially, which makes us successful financially, and to ideally trigger relationships between our LP, so Santander, and those companies in a way that ideally is a little bit beyond commercial. So we're all about co-creation, all about fostering innovation, et cetera, et cetera. And so that brings us to the topic of VCs and VCs that are related to banks and how they invest. So I thought about inviting a couple of good friends, Eugene on the one side and Gamal on the other side, to share their experiences with corporate investors, how they work with banks, and touch on a couple of points that are maybe a little bit more polemic on bank-based VCs and how they invest. So I'll leave it to Eugene.
Sure. So just a quick introduction on myself and Mambu. So I'm the co-founder and CEO of Mambu. We provide a cloud banking engine. Effectively, we have customers like FinTechs, like Number 26 and Creditech, as well as traditional banks like ABN AMRO and Santander, who use our platform as a back-end system to help them design and service financial products. So that could be everything from lending products to current accounts, revolving credit, and so forth. We're not working right now with Santander InnoVentures, but we had a corporate investment from Commerce Ventures along with the round with Acton Capital about 4 years ago. And for us, it was really the VC space, so the traditional one, the ones that was not coming out of the banking space, wasn't really so familiar with what banks are going through, their current technology, and the challenges they're having. So when we decided to work with Commerce Ventures, it was because they actually realized very deeply as to what the challenges are of banks, because working closely with Commerce, and also because they understood what we would need as we start to engage with banks, because we started our journey as a company working mostly with non-banks, with lenders. And so as we were starting to move into the space of actually working with banks as our customers, we thought it was really beneficial to have a bank as an investor who can give us a bit of that insight and a bit of that credibility as we try to penetrate getting our first banking project.
Thank you very much. And on the other side, Gamal from Bonify has probably a different experience with banks and how you relate to them.
Yeah, so what we are doing at Bonify is just giving the credit scoring to everyone for free and combining that with the transactional data from the banks to give them more insights about the real financial situation of the customers. So we are operating right now only in Germany, and we have approximately 500,000 customers. What they do is we don't give their data to third parties unless they allow us to do that. We are more or less optimizing their financial situation. Like if we see they are short of money, they are running into the overdraft, we display to them how they could save some money, or if they have to refinance one of the loans, we display to them, you could finance that on a better terms than you have right now, and they are doing that. On the other side, we are cooperating with banks, with insurance companies, with telcos, just to have the best offers in place that our customers could benefit from it. We are growing very fast since the beginning of this year, and last year we have made, Santander have made a big investment into Bonify.
Thanks, Gamal. So as you can see, both these successful entrepreneurs have different experiences with banks. When we typically approach a company to look at an investment, one of the questions that comes very quickly is, all right, what does that do from a signaling perspective? What is that going to do to my commercial book, to the way other banks perceive me, to the way other competitors perceive me, et cetera, et cetera? So I'd love to touch on that topic with you guys and see what's your perception on taking money from banks and how that affects, for good or for bad, the signaling on your companies.
Since banks for us are customers and going to be increasingly so our customers, we definitely had a lot of debates internally as to whether or not it was beneficial or not to take money from a bank, in our case from Commerce Ventures. Because on the one hand, you can imagine customers potentially considering what information would Commerce Bank take from you and the projects that they learn from you and take that back into the bank. So they potentially would see Commerce Bank as a competitor. But on the other hand, it was also potentially very strong signaling because by going through an investment round, you also get very deep due diligence and technical and product due diligence, which then lends the credibility of the Commerce name to your future customers. So we definitely did debate that quite a bit before taking money from Commerce Ventures. At the end, we decided that the benefits outweigh the risks, and we managed to also reduce some of the risks by the way that we set up the structure. So for instance, we didn't actually have a board seat for Commerce. We made sure that the amount of ownership that they had was relatively small. So in our case of it, we thought the benefits definitely outweighed some of the risks in the way that we work with banks.
So our perspective on that was a little bit different. So from the very beginning, we didn't want to cooperate with not only banks or to have an investment from banks, but from big companies as well. Until we had the conversation with Manuel, and he was the guy who was telling us what to do to save the company in terms of having a big investor as a bank, how to structure the deal, how to do that. And that was great from our point of view, knowing that a big corporation could be a kind of struggle for founders at the early stage of the company. And based on experience so far, the last more than a year since we met the first time, I think we got a lot of very valuable advice, having someone from the bank on our side of the table telling what to do or not to do to deal with such offers we are getting every month or every quarter from a big corporation.
Thanks, Gamal. So you touched on the stage issue. Do you feel that the evolution between a bank investor at earlier stages versus later stages, do you see an evolution there? Do you see that banks are probably more useful at certain times than others? Or what's your perspective on that?
My personal perspective is the earlier you are, the more difficult it is as you are cooperating with the bank with steady state processes, procedures, and so on. And at the beginning, as a startup, you don't know, even you have a big idea, but you really don't know how it's going to go. Sometimes you divert from the initial idea. And I think the more experienced we are in the space, the more traction we have, the easier it's now to say what we want and what we don't want. And that makes the cooperation much easier with the banks.
Any perspective on that?
I think our journey sort of changed. So in the early days when we started working with Commerce Bank, it was really discovering how a bank thinks and what the internal decision-making process and the politics are, and effectively using them in some sense as a reference customer, even though they weren't a customer of ours. And I think that journey evolved as we have more and more banks now, large established banks that are customers. The relationship now is really, I would say, very similar to a traditional VC, except their knowledge now comes much more from the banking space, whereas VCs tend to have more general, broad knowledge with some experience, of course, more on fintechs. So I think they add an interesting balance to the discussion topics we have, just given their natural different background.
Thank you very much. So I guess we're pretty much out of time. Any final thoughts on the topic that you guys want to share with the audience? Any learnings?
So I think from it's a personal perspective, and from our perspective is very important. The first one is the stage you are in as a startup, and as I said, the stage we were in, it was the right one just to get involved with the banks. And the second one is who is on the other side, and that is making a big difference. The chemistry, the way where the people are coming from, are they coming from the bank or are homegrown, or they have seen different startups, that make a huge difference. And that was, in our case, very decisive when we made the decision to let Santander make the last round, or to lead the last round.
Yeah, I would say that entering a relationship with a corporate investor, especially a bank, should be treated like pretty much entering any relationship with any investor. There's always going to be trade-offs from what they want and what you want, and you want to make sure that your goals of what you want to achieve out of the relationship are as closely aligned at the beginning. And I think that's as true for a corporate investor as a traditional VC. If the VC wants you to scale and flip you in 1 year and you don't want to do that, your interests are misaligned. If the corporate VC wants to use you to sap market knowledge and that's not what you want to do, then again, your interests are misaligned. So I think just like taking any money from any investor, make sure that you really understand what they want out of the relationship, make it quite clear what you want beyond the money, and then try to align them as best as you possibly can, which is a trade-off you'll have to make, I guess, with any investor.
Thanks for that. Yeah, just to wrap up on some of the last comments, I always say that corporate VCs are not all born equal, and at the end of the day, it's really about people, it's about structure, and it's about making sure that the people you have on the investment side are behaving as VCs and have your best interest in mind. And well, you work with Commerce Ventures, which I think is a great example of that. We at Santander pride ourselves of doing the same, and thankfully, Gamal is seeing some of those benefits. So that's maybe one last thing I would add. The other thing is, as you were saying, expectations. At the end of the day, when you come with a big brand, it can be a tricky thing, and I think setting expectations on what is realistic, what you can get, what you don't get, is very clear and helps you a lot probably in your roadmap as you develop your company. So at the end of the day, it's about fairness, it's about sincerity, and making sure that everybody is aligned with your success and with what we can provide as investors. All right, thank you. It's challenging to do a 10-minute panel with 3 people, so thanks everyone for sticking around, and enjoy the rest of the afternoon. Mambu and Bonify,
Thank you.
Great things to come from both sides.